What's happening, guys? Another Sunday scan coming at you for the second week of August. It is August 8th, 8-8, and the week ahead. Thursday, we got warning shots. We got warning sign that things are getting thin. Coin was a phenomenal opportunity on Thursday. It went nuts pre-market. I think it was either up 15, 17, I don't even know. Then it went another $10. And it offered a really nice opportunity off the open. So the key was, obviously if you participated in the front side, that's fine. But, you shouldn't be size. You shouldn't be adding. You shouldn't be aggressive. All the things that we talk about every single week. And if you were patient and you waited for things to kind of settle in, then there was a phenomenal trade opportunity all the way down to under $90 per share. So for me, I started in a little bit, a starter on the front side of the move. I let it do what I wanted to do. It went up to like 116, I think. And, I didn't try to get 115s. I didn't try to get 112s. But once I started to identify where it was having issues with, where it was having some sort of either pressure or a seller or, basically a repeat issue, which to me was the 109 level, you saw me start to scale in versus the 109 level. Doesn't mean that I'm going to stop right at 109. Doesn't mean I'm going to stop right at 110. But as long as 109, 110 doesn't start to develop a base over time, then, I'm going to stick with the trade. So obviously a phenomenal unwind. It worked out extremely well. Got the same action on Friday with coin. Was thinking that it's either going to flush out and come right back up. And, if 87 started the base, we talked about it on the broadcast. I liked it versus 85 and, for the potential of a squeeze out. It also offered another fade. It doesn't matter what side you're on, as long as you're waiting for setups. I personally did not capture the long side of that trade that I was prepared for. I was focused on some other ones. But with coin on Thursday, you were given the warning shots like, hey, tape's a little bit different right now. And then we had CVNA. CVNA started to do the same thing that coin did. Maybe not as aggressive, but still enough to really, clip you if you were fighting it. BYND had some major range. And, the thing about these is this is when, it doesn't matter how you've been trading the rest of the year. If you start to make the wrong moves and you start to get too aggressive, you start to really give back a ton of profits. So make sure that you've recognized that things are a little bit different. Typically, this kind of stuff starts to happen when we might be nearing sort of that top. And, my market thoughts overall, I do think that a lot of people were hedged, when the war broke out, when, the inflation fears, all this kind of stuff. And I think that's why it was such a slow and steady kind of unwind and sell-off. There wasn't much panic because everybody was kind of hedged and prepared for this possibility. But now they've wasted all this money on the hedge. They've wasted all this money thinking like we're doomed. We're going into a recession. We're going to unwind. It's going to crash. And sure, it pulled back a lot, but it didn't do the full out crash like we saw back with COVID. So what happens is people start to unhedge that position and we start to rally more than you would expect. We talk about never underestimating a bear market rally. I mean, the market's going nuts and it's starting to take everything with it, including, stuff like AMC. AMC gap down, 1650s, 17s, 1750, and then, it's over 22. So the range is back. The paper thin offers is back. AMC might start the rest of the meme names. You already saw it on BBBY as well as many others. So it's up to us to notice that, identify it, be aware of it, be cautious surrounding it, because this is where you can either make a ton of money or lose a ton of money. And the first time that I experienced this, there was a lot of big money made, but also a lot of big money lost, and some of my biggest losses. And because of some of those losses, there's opportunity cost that's missed. So don't worry about getting the top. Don't worry about missing that opportunity. The higher these things go, the better opportunity for later. And what I've noticed, on a lot of these, and I can go over some of the charts after, but most of you guys probably remember RYTM recently, THGOSS. We were tracking those moves, and they had their parabolic moves. They had one consolidation day, and then they held most of the trend and continued higher. Well, don't underestimate something like Coin or something like CVNA or BYND. All these names have come down from such high levels that this might just be catching up to where it should have been, consolidate, and then head even higher. But most of us will look at it like, man, this is way too much too soon. It should pull back. It will. It definitely will likely provide some sort of pullback along the way. But just be cautious thinking that it has to go back because maybe things were mispriced. Maybe things were, had fallen too much, and it actually is going to go back to some crazy levels again. So we don't know. And all we know right now is that there's a ton of volatility. And if you're on the wrong side of it with too much size, you're going to have trouble. So I think if you had trouble on Friday, with any of these names, then I think that you probably ignored the fact that you had a warning shot on Thursday. And I wrote that in Scan, hey, we got a sign that things are starting to get a little bit out of hand. And, maybe there's going to be more long side opportunities. Maybe just because something breaks out, it doesn't mean that it's going to fade back. It means it's going to consolidate and break out another 2 or 3 days in this current market until things shift. But the point, going back to the market, my market thoughts is that, I don't trust, this rally to be, like a real rally. I don't think it's buyers coming to the play. I think it's folks that are on the wrong side of the trade, scaling into losers, unhedging positions, not expecting things to do what they've done. Something like Coin that's literally gone over double in a couple days. If you're mispositioned, that could go even higher before it comes back to where it is today. So just think about that. And another example of that this past week, GOVX. Everybody knew. Everybody knows that they're going to raise. APTN. Everybody knew. Everybody knows they're going to raise, right? So it had gapped down quite a bit on the day that they actually did raise, but they actually raised at 4. They didn't raise, crazy in the hole like typical, right? So everybody that was positioned for it to potentially go to, $1.20 or $2 or whatever is now faced with, I have too much. What should I do? So there is that small window of opportunity. That was a great, trade, great opportunity there where it flushed down to 220s. I didn't cover until 273, I think was my average. I put some back on when it ramped up to, 420s versus that 450 level. But for the most part, that didn't turn into, any good of a trade. It just was kind of flat or plus or minus 20 cents, And right away, you could tell that it was not doing what it should have been doing. It was not staying heavy at 4. And anybody that was positioned thinking that it was going to go to, 1 or 2, obviously is on the wrong side. So, you've got that example. You've got GOVX example where everybody already knows they're going to raise and, kind of is already there. They're already confident that it's going to go down, and then it doesn't. And then you get headlines, then you get SIGA going, then you start to have all these different names fuel each other, and they continue to head higher. So keep in mind that there's a lot of demand, there's a lot of volume, there's a lot of traders right now. And what used to matter, we're back into 2020, 2021 type moves where it doesn't matter until it matters. And most people anticipate and think it matters, and they get beat. And the key right now is to forget all that, unlearn that until it matters again. Otherwise, you're going to have a very hard time trading this market, in my opinion. And stuff like ILAG, ILAG, and all these other names where there's been some really nice rebounds, former liquidation type trades. I think that T+2 is playing a big part. I think there's a ton of volume. They're letting things die off. They're letting shorts, feel good about, taking the trade and riding it out. AMTD did the same thing. Each day, close week. Gaps up, close week. Gaps up, close week. Squeezes out, closes week. And then the day they kill everybody, right? So that gave some really, really good opportunities, but that also screwed up my body clock pretty good. So it started with RDBX when I was swinging, a decent size short overnight, and I started, to I'd wake up 3:45 a.m. and obviously my mind will not shut off because I'm 15 minutes away from 4 a.m. And so I did that a couple days, and then my whole body clock was completely off, and it was that way for about 2 weeks. So by Wednesday, Thursday, Friday, I was actually pretty exhausted. I was pretty burnt, and I've been trading extremely well, but I felt really off. And so finally, I got some good rest this weekend. But be aware of that. Somebody asked the question about, can you talk about why the AMC days of waking up at 4 a.m. changed your career? Sometimes I think maybe I'm trying too hard, trying to force things for the short term and forget that I'm doing this for the long term, and small steps add up. So, it's a situation like this past week when, we had AMTD it was $11 pre-market at 4 a.m. and it's, $8, $7 by 7 a.m. Very high probability trade, very solid risk reward, great liquidity, and it was really a monster trade opportunity. Same thing back in 4 a.m., 5 a.m., 6 a.m. back in 2020, 2021 when things were nuts. The reason why it changed my career at the time is because the P&L, the opportunities were just so massive, and you had to get up, you had to be present. If you had either overnight positions or if you wanted to trade it, you kind of had to get into the mode of seeing what was going on. And so I would relate that most to something like AMTD this week, which literally started at 4 a.m. every single day and went all the way until 8 p.m., which is great and no regrets. But I told myself I wasn't going to be doing that again. And so when my body clock got off this week, I tried to get ahead of it, but I just couldn't. I couldn't fix it. So I actually skipped a few gym days to try to work on that, just because if you don't control it, it's going to control you. So if you are, stepping up and you are on that verge, this is the type of market where, maybe some of those early wake ups could provide that opportunity. But for me, I'm all set with it. But that is why it changed my career at the time. It's just because it was worth really zoning in over that 1 month, 2 month kind of time period where the opportunities were endless. And there was some good and there was some bad. And there's a lot of times that actually if I maybe had slept in and just waited for open, I might have done even better or saved a headache or stopped getting maybe squeezed out from a 7 or 8 a.m. position. But either way, when your A+ setup is active and you're on that brink of potentially taking the next level, that's really what it's about. Other than that, so the market thoughts, I just, everybody was hedged. I feel like the next time everybody will feel like they just wasted hedging. And if that is the case, and this is all just a squeeze out, and this is just my thoughts, but, I don't think this is just real buyers. I think it's actually, covers and people getting margined out. It's very, very difficult to trade. I think a lot of people are having difficulty right now because they're trying to force what used to work. And I think that in this market, I'm performing because I'm taking the trade. There's such big range. You don't need to get the whole thing. You don't need to hold overnight. There's times that things close at the lows and they gap up $2 per share. That to me is stress. That to me is not what I'm looking for. And if you notice this week, or even the last 2 weeks when things have been just exceptionally well, especially since the SIGA trade, you'll notice that I've just been hands off and patient, and I'm trying to get off the desk more, and that's going to be a goal moving forward for me. It's the kind of the last checkbox that I haven't really done. I've gotten away more for sure, but I need to reduce the hours. I've been doing this. I guess it's like almost 20 years now, 18 years, but like same bell to bell, forever, and no real like serious vacations, completely disconnected. So, that's kind of where my mindset is headed. That's where I want to improve. One other thing, and then I'll get into a couple on-screen type things and get into the scan. One other thing, which Friday I had to go do some things for the house that we're building, and I had every plan to be done by 11, and so I actually was done all the trades. I had a couple starters on CVNA and SIGA and AMC, and they all flushed down, and I thought we might have a better opportunity, but there was some good, some stop outs, some gains, and then I was done. And looking back, those were all great covers, especially SIGA, the levels that I had given. It flushed out nicely, came back, held over that trend, and never looked back. AMC, saw where I covered, consolidated, and you see me right in the room. Take note. There's a notable hold here. It's grinding. Make sure you're readjusting. Make sure you've locked in. And I remind those every single time that I make adjustments, because I know that it's easy just to stay into a position and then wait until it's too late. But there was a moment for me where MEGL, and you know what? I borrowed some of this, and so I had plans to take off, to go and do what I needed to do at the granite place. And, I traded it, and it went into a circuit halt, and, very small. I only had located like 3,000 shares. I only traded like 1,000 shares because there's no real reason to get a bunch of them. But in that moment that it went into a circuit halt, I just was like, why did I do that? And I had this thought that, what if, and I do think that this is a real risk, especially on all these IPOs. And I think it's a real warning. And I think that you as a trader, if you trade these, need to be extra cautious, because everybody has been trained that, these things are trash. They completely unwind. And HKD was an example of that. I don't really think that HKD was necessarily a short squeeze, a retail short squeeze. I really don't. I typically would know at least a couple people that were getting bent. They either reach out to me or friends or whatever. I knew no one that really got hurt on HKD or really was even focused on it. And that's says a lot, because I feel like it was probably the underwriters. I think that they probably sold. I read some stuff online, but I feel like maybe they didn't deliver the shares, and it was more of a issue with the actual folks that were part of the investment, and not necessarily retail shorts. And what I was thinking about with MEGL, and it was just this moment. I didn't even have size, but it was like, what if one of these, and it was only like 100,000 shares at the time, but if there was 200,000 or 500,000 shares, right? You never know which one's going to be, like an inside job where maybe they're not selling anything and they just want shorts to come in, and then they just go circuit to circuit to circuit, right? So be aware of that, because I had this moment when I was in that, and it was small size. But what if? What if I did 5,000 or 10,000? What if it opened at 500 and then went to 1,000? and couldn't get out, and then it went to 2,000. What if? And is it worth risking your entire career on something like that, which in the end was a complete gamble, right? So typically I don't trade any of these, but the fact that it had gapped up so much, I was like, oh, everybody thinks it's the next HKD. Maybe I'll put on a little bit. And again, I didn't have size. It wasn't really a big issue. But in that moment when it was halted, there's a lot of thinking, like, what if? What if? And I didn't think that was the one, because of the volume. I just think that they'd probably want, a couple 100,000 shares short or a million shares short or something. But it just was a good, I thought about this moment on Sunday Scan about, what if? What if it doesn't come back? And that's why we stick to edge. And that's why we stick to liquidity. And that's why I always wait for real sellers. And then you start to hear stories and talk to people and see other people that post their trades and things. And you realize that a lot of people are all doing the same thing. What if they stop going down? What if they don't do what you expect? And everybody just did the same thing. And that's why you see stuff like APDN and GOVX and all these things, because everybody already knows. Everybody is already thinking the same thing as you. But the new edge is understanding that everybody's already there and waiting for it to either prove them right or be able to take advantage when they're proven wrong and not be emotionally attached. That is the new edge. It really is. Just like the full day unwinds where, we used to look for delusion and, they typically hammer, something all day long from, 9:30 to 4 p.m. You could call it the fridge trade, right? Where you just let it work for you and let it do its thing. Everybody understands that now. Everybody knows how to do that. And so everybody's doing it. And if it's sideways at 10, 11 a.m., guess what? It's going the other way. And everybody is already sized and everybody is already of the mindset that they're right, and it's going to go all the way down to 4 p.m. The new edge is waiting to figure it out, waiting for it to show you, waiting to see, where it's going to go, and it's going to keep you out of that trouble. No different than coin and AMC. AMC, the first time that, I had never experienced anything like that before, and gamma squeeze and all that kind of stuff. It's tough. So, last comment, make sure you got a max stop. My max stop's probably hit 4 times this year, maybe 5 times. And I actually adjusted it way down. I talked about my max stop at the last Traders for a Cause. And, I discussed what that number was and why. But then, I'm thinking over the last couple months, months after the event, like, why? I'm rarely even down 1/3 of that. So, I had adjusted it way down, and, basically it's 1/3 what was discussed at Traders for a Cause in Vegas. And that gives me enough wiggle room. And the rare times that, I am down that amount, there's no emotion, there's no, let's see what it does. And you can always adjust it if you need to get a little bit more. You can always add 10% or 20% more to that number. So you're basically adding to the stop. The biggest issue for me is that initial stop. Something like AMC, when you're down $1 on size, that's fine. That's no big deal. But it's the next 2 or 3 or 4 that happen like that is really the difference between, giving back, just a day or two, or giving back a month or a quarter or whatever it may be. So I don't think it's a bad idea to have a max stop right now. I would highly suggest it. Think about when you trade the worst, what is your kind of max drawdown? And then give yourself a little bit of buffer above that. It's rare that you're down X and give a little bit of buffer. That way it protects you from yourself, and it has been an absolute game changer to my career over the last, many years. That was the last piece of the puzzle that was missing for me to, look back each year and look at a handful of days or a dozen days and add up those losses and think about, the houses you could have bought, the car, whatever your dream is. But add it all up and go back to those 5, 10, or 12 blow-up days for lack of a better word, add it up. And if you could prevent that and you could cut it off each time, there's going to be times that you stop out and you're pissed. And it's part of the game. But think about it. Tape is thin right now. Protect you from yourself. And let's get into Sunday video. All right, guys. First and foremost, and then I will get into some of the things I promised. But I am not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. If you're not okay with that, shut the video off. My goal here is to show you how I prepare, show you how I think, and hopefully that kind of gets you in the mindset of what makes a good trade, what gives you edge, and what doesn't. I talked about a little bit of crowded trades and bounce charts and things like that, things that have been working in this current market environment. What I wanted to go over was something like RDBX. We talked about RDBX and that bounce day. Really nice opportunity. I actually, unfortunately, missed this on Friday. I was prepared for this move either, near term, but the vote, we talked about it last Sunday. And I said that we need to watch it into the 9th because there's a good chance it does a little something right before it. Just because shorts are on their toes. What if they deny? What if they vote against it? Or what if they vote for it? This thing was like a take under, if you guys remember. I think it was like 70 cents a share. Don't quote me on that. Look it up for yourself. But their deal with CSSE, which has actually been coming up pretty nicely. But that said, this is the day that it came down, if you guys remember. And anyway, we came all the way back down to that level. We rebounded. This was the perfect type of setup. Same thing again, and we have a catalyst on the 9th, which is the vote. We had the same opportunity here on FRGE, same action. I'm not looking to buy the dip and add and try to find the bottom, because that's when you really, really get hurt. But what I focus on is, when does the panic start? And you have a little bit of a rebound, and sure, this one didn't hold that day. Then you get another round of panic. So then the next day, on Thursday, it started to ramp up. And on right over here, see it started to go. Buyer in the tape. And you know what? I joined it, and I think it was 952 was my first buy. Just kind of joining in the trend. It started to come back a couple times, started to hold versus VWAP. You can see all of those, all the retests and the wicks that we talk about. We talk about wicks getting soaked up versus VWAP. Should have died here, ended up holding versus that VWAP level. You can see, each time it pretty much came under the 560s, it gets soaked up, gets up over the prior level of resistance at 6, and, away it went. That said, same chart. You don't need to be first. I'm not going to be first. I don't care about trying to find the bottom. That's, like I said, that's how you get hurt. But I will not forget a chart like this that I see. And then when it starts to go and there's a buyer that day, then I think, what size do I want that I'm willing to risk towards the prior lows that will let it work? And in this case, I think it almost doubled. So in 30, 40, 50, 100% type move where you can risk 10%, that's a solid risk reward type of setup. We've seen it multiple times. KSPN, another example. This one happened to be a chat room pump, but after that pump faded off, the volume started to churn. Maybe an algo came in, and ended up being a really nice secondary type of move. At this point, all pops probably fade off. Unfortunately, I missed this opportunity on Friday. I wasn't paying attention to it and had other things, but you can see that it had the same peak at the 685, 7. Basically 680s to 7 level before it unwound. So, these are the things that I look for, topping action, things like that. But same kind of chart where it's just gone straight down. That's what the market wants right now. Everybody's chasing everything after HKD. Everybody, AMTD, $1 to $12, $13, whatever it did. So right now, FOMO is crazy high. And if something starts to go and rips, people would rather chase, rips than buy dips right now. And so be aware of which ones are holding, which ones start to churn their volume, but also be cautious of the one-day oneers, where or the one candle wonders. There's a lot of people that are trying to start things. They kind of go up and come right back down. For me, I want to see them go up, consolidate, and start to have that secondary trend, rather than be chasing that first candle. And just like you saw in FRGE, it kept on getting absorbed. It should have gone, it should have died, and it kept on holding. So today is obviously different. And, obviously we had a similar situation on Rev, same kind of situation, steady down, look for the day that it's, holding and, it's holding oddly well. Those are the days with edge. Those are the days I'm focused on. These are the charts that I'm looking for. And then otherwise, we already went over the crowded trades. You guys saw what those look like. Last comment about that is, stuff like, TH, RYTM, and, something like GOSS. Great examples of, this is what coin looked like. This is what CVNA looked like. This is what BYND looked like before the big days. And you look at it and you're like, yeah, this makes no sense. This should pull back. This was too big of a move. And then all of a sudden, guess what? We're still at the highest point that it's been since this swipe. So that should really put you in the proper mindset when you're trading stuff like CVNA or BYND or coin. Yes, it had an abnormally big swipe, abnormally big move, but it doesn't matter. You can't come in with a bias thinking that it's supposed to fade, it's supposed to pull back, it's supposed to do this or that in this current tape. And example of that as well is AMC, which is the first obvious main watch. People are excited about this, so now we've got the catalyst of the ape coin or whatever. I don't know the date on that. I have to check. I think it's in a couple weeks. But that could act as a catalyst. So, any big flushes likely get soaked into that catalyst. And so until it starts to really extend and extend and extend, and there becomes a big edge, such as something like SIGA, last Friday, where it's, day after day after day after day, it just has not pulled back. I'd be super, super cautious on this thing. So it's going to be a great trader, but don't think that it has to unwind until they really blow folks out. And it's going to be a great trader every single day. It had range, from 16, 50, 17s all the way up to 22, almost 23. So there's going to be trades there. You can trade it both ways, but just don't fight it either way. And you saw, the warning that I gave in the room, and it had a great opportunity off the open, had a great, fail over here. And then what happened? VWAP proved to be, base, and it started to do a nice little ABCD and never looked back. So, you saw the warning over here, notable trend, notable hold. And, I reminded everybody, if you did participate in this morning, even if you're up, don't turn into a loser. Don't overstay. Don't fight the trend if it's holding versus VWAP. VWAP is your friend here. SIGA, very similar action as well. We talked about the key level here, and it was 2110 or so. So it ended up coming back under that level, reclaimed, and then, never really looked back. Came back, checked in with VWAP, and, never looked back. So again, VWAP is your friend here, and you need to be super, super cautious. So I'm focused on these because of the range. There's big opportunity. If they run 2 or 3, I'll probably look for that $1 opportunity, but I'm not looking for the $5 opportunity, not yet. And then, something like ILAG, this is an example like I was talking about, the T+2 type move where, you've got 50 million, 5 million, 1 million, and then it returns back to 70 million shares. This is just a trading vehicle, but they've trapped shorts, and now they're going to blow out those shorts. And there's going to be people that think, oh, well, I'm getting in at a better price than the other shorts, so, I'm going to go ahead and short it here, and they're going to get blown out. So I want to be patient. I want to let all the emotions leave, and then I'll be interested. And I really, truly believe that is the edge in this market right now, is let everybody else with the high conviction, let everybody else that, is focused on these styles of trade like they've always traded. Let them trade the way they know. Let them trade the way that worked last year. And then once they stop out, that's when the edge starts to come in. Last two, and this is actually more main watches than I typically have, but we're in a crazy market, and if you notice, they all have extreme liquidity and big range, and that's what I want. So I will take these 4 or 5. What is this? 1, 2, 3, 4, 5, and it'll probably be 2 main watches on Monday. But something like this on lift, I'd love to see a nice gap up, maybe test up over towards this 2250 level, and then sit back. And an example of that is DraftKings, where we had a very similar situation. It gaps up, rips, and sits back. And that, to me, doesn't mean that it is over. It doesn't mean that it's going to start to fade from here. We might actually head right back up towards the highs. But there's a high edge trade this day. And, something like Lyft could do the same thing where, gaps up, ramps up to 2250s, 23s, and sits right back. And that doesn't mean that it's going to, fade from that point forward in the days ahead. But I believe that, being able to take advantage of those consolidation days is where the edge is. But a lot of people keep on trying to force more and more and more, and that's where you get chopped up. That's where I've been chopped up in the past. Same thing we talked about on coin. I talk about the same thing on scan on Thursday night. I said just because it's a candle like this does not mean that it's negative. It does not mean that it's a sell-off. It does not mean that that it's going to continue to go lower. You never know if that's just a bunch of folks taking off risk, a lot of shorts coming in because it's weak, holding over, and then we start to form a new base. It could have been a transitional day where this area, this 90, 95 range starts to become a new base before it goes to 120 or 150, which could very, very realistically be the case. Other than that, CVNA, another one of those thin tape. If you start to get a sense of wild action and you put anything on above starter size, you need to cool it. You need to be super, super cautious. So this one came back extremely well. I think that if I stuck around on Friday, I would have been chopped up some, but this one, ended up being a pretty good opportunity. So you can see that it's pretty much stuck in this channel right over here, and down to about here. So usually there's range within these kind of channels, but if you find yourself kind of anticipating one way or the other, and you're stuck in between these ranges, adjust, be cautious, watch your size. That's when you get hurt. But more in the room on Monday for sure. But no real opinion. I do hope that we'll have some sort of gap up, 50-52, and then I'll be looking for failed follow through. APDN, higher the better. I'd be looking for maybe a shove up towards 6s and then failed follow through momentum. In my opinion, it's just got a lot of shorts all anticipating the same thing. If SIGA continues to go, APDN could have a bid, just like GOVX. So be aware that, if you're getting biased because, it should fade back and SIGA is suggesting something else, just be aware of that. But what I gave the room as an example, pets, if you go back and look, they did a reverse split, so you can't really, look at the pricing, but very similar situation where they had done like a raise and then it ended up gapping up, and it took like 2 months to come back in before they did another raise in the hole. And I actually think that's what's going to happen with APDN, where they got shorts twisted. They probably made them do a good pricing and probably did like a wink, handshake type. We'll take care of you on the next one. And if that's the case, then I would expect in maybe 2 or 3 months you'll start to see you'll see a big pricing in the hole where they took one for the team here, they priced it at 4, and they end up doing something in the hole later on. KSPN, higher the better, failed follow through, same deal. QRTEB, they should all look familiar. They've been fantastic opportunities, and stuff like PGY, really nice opportunities lately. Not finding the top, letting it turn, letting it fail. And the day we talked about, the day that it's down 3 is probably going to be the day that it's down 10. And that was this day. Huge unwind, great covers at the close. Continuation side of things, I'm watching just in case liquidity trap type situation. If it fails, then I'll be looking to fade it back. So, you know, if it's under 115s or so, I would be looking for it to fail. If it starts to base over 130s, then we have a potential liquidity trap. Just because it's on continuation scan does not mean I'm bullish, but I would need to see it base and hold over 130s to get excited about it. But, you know, 148 million to 11 million to 4 million, that's a liquidity trap. SNTG, it's been trying the last couple days. Nice little rip up to almost $1. That was a nice one. And Turks, same thing. These were all, you know, liquidity traps back in the day. You can see right here. Or excuse me, liquidation trades back in the day. SNTG, same deal. So what, you know, a lot of the stuff that's been happening, people are coming back to these and, you know, trading them from, you know, past liquidation trades. They come into them as a trading vehicle, shorts get squeezed. And then every now and then you're going to have one that, you know, trap shorts. You know, SOPA was a nice liquidation, and then, you know, people got a little too aggressive. BWV was a liquidation, and then people got, you know, too aggressive in here. So just be aware of that. They're not all going to do that, but there's definitely been some accumulation on SNTG and Turks, and a lot of, you know, false breakouts, but at some point they could continue. OPGN has been the one of the few that has yet to put out a PR like APDN and NVC, was it, or and one of those ones. But, you know, nothing that I'm excited about. But you can see the volume, you know, starting to churn up over here. So that kind of got my interest. Like, okay, somebody's, you know, been in the market and accumulating. So obviously, you know, there's not really a reason to be excited unless it gets probably over 65. But what I look for is, you know, what are people soaking up? And if they put out a PR related to monkeypox, just like all the other ones, then, you know, obviously there is a possibility for a nice run. Last two, DraftKings, looking for potential continuation, dips, and possible retest back towards the highs from Friday. And then last but not least, VRM should look familiar. It's been on scan a lot. Nice breakout here on the daily. So no position on that one. But I think that's about it. Yeah. So if you guys have any questions, as usual, you know the deal. Leave it in the comments section. As long as you're leaving a key takeaway, leave a key takeaway with the timestamp. Before I forget, t-shirt winners, Clay Ruff, RUF, and Dustin Melquire. You guys have the t-shirts for this week. Thanks for watching, and we'll see you in the room on Monday.